What's going on, guys, and welcome back to the channel. Hey, so the other day I was looking at an article, and the article talked about millennials, really older millennials, so me basically, right? So the article talked about how for the past 5 or 10 years millennials have been working so hard to get to this level where they're in this leadership space, where in the leadership space they're either managers or executives, where they're making more money, right? And so what I found interesting about the article was that although a lot of millennials have made it to that level, even financially, they still don't feel accomplished, right, within their personal finances. So guys, check it. Stay to the end of the video for some really good tips that I've learned from some of my millionaire friends on how to save more money, protect your funds, and also make more money more strategically. Run it, let's go. On, guys, and welcome back to my channel. If this is your first time joining me, welcome. In brief introduction, my name is Sean Harness. I'm an engineer, also a business strategist. I spend a ton of time building and managing multi-million-dollar businesses within several Fortune 500 companies. My channel goal is to help you secure the wealth you deserve in your everyday life. So what that means is we're going to have discussions on this channel about personal finance, about career planning, so climbing the corporate ladder. We're going to talk about business. Also, we're going to talk about lifestyle. And before we get started, let me remind you to hit that like button for the YouTube algorithm. If you like what you heard today, also be sure to share this content with someone who you think could benefit from the information. Also, check out my website, SeanHarness.com. I have a free 3-day money video course there to give you some really good tips on how to level up in your business as well as your career. So guys, look, the past couple of weeks, I've been having a lot of conversations about career planning, right? So today I want to jump back into personal finance, and mainly because I just feel like right now, I feel like all of us could benefit from increase and overflow as it relates to our money, right? So for today, I want to give you 6 tips that I've learned while being in corporate America, also being connected to some very high profile, wealthy individuals who have taught me so much as it relates to saving money, protecting my money, and also just making more money overall. So number 1, start an emergency fund. So I have a video on emergency funds. Go check it out when you get a chance. After this video, if you want to learn if you want to go a little bit deeper into that topic. But I talk about emergency funds a lot as it relates to personal finances because I feel like this is the place where you need to start. And mainly because this is not a short-term or long-term investment per se. This is more so for insurance. You want to be protected. After you do your budget, what you have left over, you want to figure out a good amount of money that you can put aside and put into your emergency fund. When you determine that number, that should come out automatically from your check. You don't even want to see it. It goes into an account, a separate bank account that is interest bearing. So you can essentially have money sitting in a pot where it's just gaining interest and gaining more money. So a huge focus here, guys, is for you to save at least 6 months of your expenses if you can, right? So if you have $1,000 of expenses each month, you should be looking to save $6,000. And if you can't do that, you should focus on just saving $1,000 just to start. So whatever you have left over after your budget is done, let's say you have $200 left over, set aside like $50 a month until you get to $1,000 to reach that first goal for your emergency fund. So number 2, find ways to protect your money. So wealthy people, 2 things that they do very well that helps them to be very wealthy over the course of their generations, right? So one is going to be real estate. So investing in real estate, essentially real estate for yourself, your family that you can either pass down or you're gaining equity in your home. Secondly, they invest a lot in life insurance. And when I'm talking about insulating or protecting your funds, this is the areas of other insurances as well. So you know about auto insurance. You should probably invest in renters or home insurance. There's long-term disability. Let's say if you get hurt, what if you get hurt, you can't go back to work? There's a monthly fee that you can pay each month so that essentially you can still gain your check for a certain period of time. So number 3, learn ways to increase your disposable income. So you guys ever wonder why I talk so much about career and entrepreneurship or business? It's mainly because these are areas where you can increase your disposable income. So let's start with career. So from a career perspective, this is essentially finding the best ways to get promoted, increase your salary, how to interview, how to redo your resume, just how to be strategic in order to move properly in order to get to that next level. Some people don't want to have direct reports. That's fine, but it doesn't hurt to earn more money, get bigger bonuses, because with that, you can take that money and do other things with it, whether it's invest in real estate, investing in other investment vehicles, foreign exchange. A lot of people are getting into Forex, trading in the market, right? Or other assets where you can essentially make more money. The other place, obviously, where you can gain tons of disposable income is entrepreneurship. I talk about entrepreneurship with people often, and a lot of people have the same thought process like, well, I don't know what it is that I can invest in. I don't know what it is where I can put money at. That's true. A lot of times when we're thinking about it and we're not savvy about business or savvy about where to invest, let me give you a few examples or areas where you can essentially get big chunks of money for your disposable income. One area that I'm very familiar with is contracting and procurement. This is where essentially entrepreneurs are tending to make tons of money. What they're doing is providing a product or service under certain contractual or legal terms, right? And they're gaining big chunks of money. So typically we are used to people making, let's say, $100,000 a year, maybe if they're doing well, $150,000 a year doing well, right? Entrepreneurs who plug into contracting and procurement, if you do it the right way, I mean, I've written purchase orders or given out money to companies at like $10,000 a month, or sometimes $50,000 a month, or $70,000 a month. These are areas and these are ways that people aren't really used to getting into. Hit me up in the comments or hit me up on my website if you're interested to learn more about this area. Right. So number 4, make wise decisions about where you live. So the topic of real estate and your personal finances is really important because that's probably one of the first things that you pay for. Because, I mean, you need a place to stay, right? You're always going to need a place to stay. Whether you're renting, whether you're buying, you're going to need a place to stay. And I say that you need to be smart about it because you don't want to overspend for your living arrangement. Experts say that you should spend no more than 25% of your take-home pay after taxes for where you live. Also, I think about an area that's not really talked about often is really where you live. So, meaning geography. So, I moved to the South from the Midwest, and I'm not telling everybody to do that because that's not everybody's cup of tea. But I can tell you the cost of living in the South, a lot of times for me, it worked out better, right? So the cost of living was better. The weather was better. And then again, getting more house or more living space for your dollar. Something to think about. So number 5, saving for retirement. This one is also very important, mainly because a lot of you guys work at companies where essentially they have a 401k or a Roth IRA. 401k, they have this match, meaning up to a certain amount what you put in, whether it's 5 or 6%, they match that automatically. So that's like free money to you. I mean, you would be crazy, in my opinion, not to take free money from a company if they're offering that. But you actually need to set that up early. So it's coming out of your check and you don't even see it. And for those of you who are new to just retirement funds, you take some money, you put it into a diversified fund, and there's an algorithm that essentially invests your money in different smaller funds. You also have money going into a fund that has very low risk. And when I say low risk, I think on average, the return from a 401k is typically about 10 to 12%. So if you think about that, that's compound interest as well. So you put $100,000 in, you may make $12,000 over the course of the year. You have $112,000, you make 12% on that, and it's compounding year after year after year. All right, guys, and number 6, and lastly, pay down debt. So This one is also very important, obviously, because when you begin to pay down debt, your debt to income ratio begins to look much better on your credit report. And that's very important if you're looking to do anything strategic with your personal finances. Paying down debt, there's two ways. The first way is to focus on large interest rates, because essentially if you have larger interest rates for, let's say, credit cards or student loans, these larger interest rates are where you're essentially paying more money versus you paying less money. The second way is to do something called a debt snowball effect. So the lower amount, you pay that down first, gives you more confidence, makes you feel better, and then you go and you move up and you pay down something that's maybe a little bit more than that last piece that you paid down. And you keep going until you pay everything off. That's a debt snowball. I think the first way that I mentioned is better if you can do that, if you have access to that much cash. Otherwise, you should do the other, because this way you can pay down debt quickly if you have smaller amounts of cash. Guys, that's our time for today. Thank you for joining me. Be sure to like this video and share with someone you think that can benefit from the information. Also, be sure to check out my website, SeanHarness.com, if you like some more really good tips on how to elevate in your business as well as your career. Until then, peace out, guys. We out.